Good day, guys. Okay, I am saying Bitcoin's relief rally cancelled. Shit, that's bad. And I want to back that by giving you guys a tutorial on divergences, teaching you how they work. Then, well, first what they are, how they work, how to see them on the charts. I've got a little Elliott wave marked up for you. So, and then from that point onwards, we're going to go back to Bitcoin, Ethereum, BNB, and Solana, and then I'll show you why I think relief rally is potentially over. Oh, that's bad. So let's get into this. Before we do that, if you want to learn a little bit more, you know what to do. Hit the like, hit the subscribe. It does the algorithm a favor. Not me, the algorithm, which shares the content to other people. So please help that. Teach the algorithm. Right. Now, here we've got Bitcoin. And the important thing is when we have divergences, we need to understand what it is. And the best way to do that is with a little story, a short story. I'll be very brief. And it is something that really clicked, made me understand what it is divergences do. And it was a Mark, I want to say Wahlberg, from Trader Mindset. What's it? Mark Douglas. There we go. The surname ran away from me there for a moment. And basically, he had this brilliant technical analyst that he tried to coach. And at some stage, he gave up on the guy and said, listen, what you need to do is maybe go work for one of those trading houses, selling your technical analysis skills. And from that point onwards, maybe from there, you can grow further. And the story is that the guy came back to him and said, well, okay, I went to the house, I did the technical analysis for the guys. And at that stage, you know, your technical analyst and your trader were two different people. The trader were on the floor pits, the technical analysis had to create the charts, nice charts that I've got here on the screen. And then they will send that information through. And speaking to the head of the trading house at one stage, he said, listen, looking at where we are right now, there's no way that soya beans are going to fall lower because the daily is going to close at this support level and things are going to be amazing going forward. We're going to see upside. And as he was saying this, close to the end of the day, the boss or the head of the trade house picked up the phone and he phoned down to the traders below and said, sell 1 million of this. I'll show you how powerful your technical analysis is. And all of a sudden, prices below it, and now everybody sells off. And that teaches you the context of what technical analysis is. It is a measurement of what has happened with an anticipation of what the future might bring. And it's the exact same thing that divergences try and tell you. It tells you whether momentum is getting weaker or stronger, whether you need to think long-term, more trend, or you need to question the validity of the trend. But it does not mean that you can't have momentum re-enter. Therefore, when we look at divergences, we have to have invalidation levels. And that's the second part of understanding divergences. Otherwise, it's nothing else than anybody else showing you a divergence is simple. The RSI does make a higher high and price doesn't. Doesn't help you without understanding where it sits in the context of momentum. Okay. Now, let's talk divergences. We've got the mindset behind us. Divergences looks as follows. You can find this chart online. You can literally just Google types of divergences and get this chart. And for today, and basically what I always do, I believe in the 80-20 rule, which means 80% of the time, 20% of the patterns will occur. So you'd only need to have a little bit of TA to be very good at TA, as opposed to trying to do the opposite. Read everything about Elliott wave, read everything about Guan and Wyckoff and smart money concept. There's so many versions of that. You don't need all of that knowledge if you arm yourself with what happens most of the time. And in this instance, it is strong, bullish or bearish divergence and hidden bullish or bearish divergence. And you see that they've got two categories to them. One is a reversal divergence. So when we spot that divergence, the anticipation is that we're looking for the trend to change, versus the other one is a continuation divergence. This is normally your buy the dip divergence. If you see this, you can start adding in onto the momentum of a current trend. Now, how would that look on a chart? Let's have a look at that. When we have a clean impulse wave, now remember, TA is brilliant at telling you how the past looked. So it's easy to explain this in the past. When you have a nice 5-wave impulse, here we've got Bitcoin at $15,000. And maybe what I need to do, because I decided to go on a white screen for education, I just need to change the crosshair and maybe make that a color that will pop as well. What color should I use there? Maybe a dark blue. Let's see how this. Oh, that looks good. Right now. So what we want to try and do is we want to understand that when you have these lows to these highs, let's make that a dark color as well. We'll go with a black. Lows to these highs, you will have your divergences play out, and then you'll have, when you have that buy the dip emotions or that buy the dip scenarios, that's where you have different types of divergences. Okay. Now, a 5-wave impulse has got certain rules and certain guides to it. And I want to go through the Elliott wave versions of it. But what I want to show you is if you look at the 5-wave impulse in an ideal environment, now it's in the past, you're not emotionally attached to this. And you switch this onto a line tool, which makes it very simple. You can clearly see that when you have strong bearish divergence, price goes and makes a higher high, the RSI makes a lower high. That signals the end of a move. And you will have strong bearish divergence here as well. Price goes, look at that, price goes and makes a higher high, but the RSI doesn't. Now, I can label this bright green and say strong bearish divergence. But as you can see, although this is a reversal divergence, let's leave it with the black lines. Although there's a reversal divergence, it doesn't necessarily mean the trend is over. Here you had it again, strong bearish divergence, and price making a higher high. So the invalidation of a strong bearish divergence is critical then, because it means nothing unless what happens. So if we look at this move, you can see there's certain rules here. The wave only retraces if price falls below the divergence pivot, the first pivot, that point there. What I'll do is I'll make that line black for you. So you can see what happens is we make a higher high in price. Let's make this line as well, instead of a gradient, a solid black line. There you go. As price goes and makes a higher high on the RSI, on price, the RSI makes a lower high. And if we fall back below that level, that's the strong bearish divergence then we need to take note of, because then we'll have a correction. When you have your divergence, that's why I'm not using any of those as divergences, because we didn't fall below that original pivot there. But there we had another one. And what happened? We didn't even fall below that level. So we said we can have more move. And here is the divergence where we fall below that level again. Now, if we fall below the level, the argument is now we could potentially have a bearish trend. That then explains where hidden bullish divergence comes in. Now, hidden bullish divergence looks a little different. So now we know strong is we go make a higher high on the RSI, a lower high on momentum on the RSI, higher high on price, lower high on the RSI. And the same is then from the bullish point of view. If we want to look at more, a continuation, what needs to happen is price does the opposite then. But now it's looking at the lows. We're saying, well, if we want this to be bullish, price cannot make a lower low, but the RSI has to say that it's reset. Now let's go back to the chart. If we have a look at what happened here at the number 2, make it bigger again for you. What happens is price makes no lower lows. You can see it's closing equal highs, doesn't make any of these lower lows, but your RSI has retraced. From any of these lows, it's made a lower low. Okay, hidden bullish divergence. This is signals of buying the dip. If you go to these moves over here even if you want to just trade that pattern, what do we have? There's a low, there's a low, this is harmony, this is harmony. But considering this pivot, all of this is still hidden bullish divergence because this is part of the move. Subsequently, we use that as a strat 4 area to hunt for our buys. And where we're at right now, bigger picture, what do we have? We've got the RSI falling below, but there's the pivot, lower lows and lower low in price. This now is no longer by the dip territory on this time frame, considering this wave, because what we should have done is we should have had that pivot and price should have dipped, corrected above that line. And that tells you that the continuation divergence on the daily time frame, let's bring this back, has been deleted. And because of that, it allows you now to change your bias from being bullish to bearish. Because all of this, we were bullish, 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 but now we're bearish because we've deleted the continuation divergence. This means now if I want to trade this, I need to look for that same continuation divergence, that hidden bullish divergence we had. I need to now look for the hidden bearish version of that within this trend. But before we do that, let's recap everything that was said, make sure that everybody's on the same page. If you have any questions, guys, you're more than welcome to drop them right now, and I can read them as we go through the stream. I'll just quickly say good morning to everybody that's joining in live. Good morning, guys. Good morning, good morning. Nice to have you here. Okay, so we understand where strong bullish divergence lives. We understand where hidden bullish divergence lives. And we understand that when you're trending upwards, you're looking for strong bearish divergence only, and you're looking for hidden bullish divergence only. Because a strong bearish divergence, I think, is not the right name for it, because it's going to give you strong bearish, strong bearish, strong bearish until it breaks through eventually. So strong bearish divergence in essence is still a bullish sign unless you fall below the pivot. That's it. That's the big lesson there. And now that we understand that, we can easily position ourselves to know what type of divergence we want to use. Okay. So here's a 5-wave Elliott impulse. Why am I using that as a 3 and not that? Well, simple. Because where did we get the hidden bullish divergence? We got it there, we got it there, we got it there. All of this is part of the move. So in my opinion, this was all part of a 1, 2, 3, 4, 5 like that on a smaller time frame. And your 3 to 4 is typically a complex correction, which we did. So where we're at right now, this could be an ABC correction, but considering the context of this is that this could potentially be your A, your B, and then your largest C. Finishing off Bitcoin from a 1, 2, 3, 4, 5 long-term bullish move to a bearish move. This is now maybe getting too ahead of ourselves, being a little bit too bearish for our own good, but it's just context of where we are. So the importance here is understanding that if you want to read your divergences, you need to consider the RSI, mark out the points, and you will always find that your tops will be identified by strong bearish divergence. Your bottoms will be identified by hidden bullish divergence, and that's an easy way you can keep tabs of this. And the same there, and obviously the same there. You can see them in the RSI. Now let's take away those notes there. I just want to clean up the RSI a little bit. This then means that, Rudo, if this is the case, wouldn't we now, with price being where we're at right now, have hidden bullish divergence on the higher scale of things? And you could say yes, but because we're looking at that being as the 4 and not that, this then means we have now made a lower low, as well as confirming then that we're in a bearish trend. And that again speaks to what I said in the beginning of the story. Momentum at any stage could enter and change your beautifully laid plan completely. So when we do these things, it's important to have the labels, to be able to say, this is where I invalidate. Otherwise, there's always going to be hopium. What about using this then? And price is still staying above that level. There's still hidden bullish divergence. This is how people get tricked by themselves. And the same there's. But there's got strong bearish divergence. What price to stayed above the level. As long as it's above the level, you can still think bullish thoughts. Fall below it, you worry. Okay, fell below that range, no more bullish thoughts. You need to worry. We shorted at 116. We shorted all these levels out. There, when we fell below that level, promise you, we needed to worry, and we did worry. Although we did get our buy at these lows. Proof is in the charts, guys. You were riding the waves and the buys with me as we went through the market. So let's quickly see if the market's going to allow. This is all the buy and sell setups I shared on this YouTube channel as we went through this entire move. Okay. Sell zone, buy zone, sell zone, buy zone, buy zone. Okay. And then the big mishap. We wanted to buy there, which never happened for us. We never got that buy. Okay. It's one of those things. Buy zone, sell zone, sell zone. Okay, there we have it. And then the ultimate bull market take profit zone, which was there. Clearly marked out based on the divergences. Okay, I think you do have a really good idea now of how the divergences work. We've discussed how to use the RSI to identify them. I've marked out a typical 5-wave impulse so that you can see how they play. And then what we had done as well, we've looked at where to invalidate. They can't make lower lows because obviously, as per the divergence schedule, there's certain rules. Now, why am I ignoring the medium and the weak? Because it's too much, it's too open for interpretation. That's the reason I ignore them. I focus on the strong and the hidden because there's clear, simple, defined lines. One is higher, one is lower. And as soon as you start making double bottoms and double tops on this, yes, the momentum might not. It's too iffy for me to statistically be accurate with that. I'll rather wait and see. And that's the trick. We tend to want to be, okay, but it's not there, but it's there. And then it does this, and but it's still weak divergence. And you, in the end of the day, you end up wrecking yourself trying to figure out the divergences that doesn't really occur that many times, or is that valuable for you for trading. There you have it. Full on idea of how to use divergences. Now that I've shared that, let's apply this to real world charts. Because I'm saying relief rally is over for Bitcoin, Ethereum, perhaps Solana and BNB. Let's back that. So I'm going to take all of this that I've shared with you guys, and I'm going to do this exercise with you guys live so that we can see how it plays out. So you can make an informed decision. Remember, as I've now illustrated, technical analysis is not a guaranteed tool. It's a measurement, and we're trying to just look at the most plausible next direction for something. And that's all we're trying to do. We're just trying to see what the chances are of a specific outcome and then trade in that direction. So here we've got Bitcoin on the 4-hour time frame. What's the rule then? If we want this to be bearish, cancel the relief rally, what type of divergence do we need in the market? We need hidden bearish divergence. That's a continuation of a bear trend. If we want this to be bullish, we want this to be a buy the dip on the 4-hour time frame, we need strong bullish divergence and price to get above that strong bullish divergence pivot. I'll draw the two out for you guys on the screen. So one will be the price making a higher, let's draw it in a bearish context so it doesn't confuse you. Price making a lower low, and the RSI, just change that color, I'll make it light blue. And then the RSI doing the opposite, making a higher low. I'll make that white. There's your strong bearish divergence. And the key is that price needs to reclaim that level for this to be strong bullish divergence. Hidden bearish divergence, what happens? Price will make a lower high. Now we're looking at the highs. And your RSI will be doing the opposite, making higher highs, giving you hidden bullish divergence, or hidden bearish divergence. Sorry, guys. Always a tough one to keep mind. Hidden bullish, hidden bearish. I should have made bulls, and then we should have made bears a different syllable. Elephants. Bull and elephant market, something like that. Okay, so there you have it. Those are the two things that you need to look out for when you want to say relief rally is over. Meaning, I want to see, if I want to be bullish, okay, I want to see strong bullish divergence in this area. Do I have it? No, I do have RSI turning, but I don't have the bullish divergence. So it's a little iffy at this stage, to say the least. And then if I want to be bearish, what do I need? So I want the relief rally to fail. What do I need? I need to have hidden bearish divergence, which is what we have. Let's make that a purple. So unless momentum enters, unless somebody picks up the phone, and maybe it's Michael Saylor, and buys 1,000 Bitcoin to drive this thing past and then add momentum to the market, allowing other people to feel confident to jump in on this. All that we as technical analysts can do is to say that we need to bet that the trend is going to continue on, meaning that this area here at the top is resistance. And this area here at the bottom, now being support still, is not a strong support level, because we bounced off that support level. I'll make it green again. We bounced off that support level and failed to make a higher high. We failed to delete the hidden bearish divergence that's living at the top. That's where we stand at this given moment, guys. 4-hour swing trading time frame. So it makes it simple for you then to say, what's my bias? My bias needs to be bearish. Right? There's the divergence, clear as daylight. Ethereum. Let's do the same exercise for Ethereum. Ethereum sitting in the same situation as Bitcoin right now. Make it a little bit bigger. We don't have any strong bullish divergence. So this supports the idea that this is just a lateral range. It's not a distribution. It's not an accumulation. It's just a lateral range. We get them a lot, guys. Wyckoff clearly says not all ranges are tops and bottom ranges. Sometimes the market just needs to gather more momentum for the move to continue. It's just a range. Now, smart people, instead of distribution and accumulation, has learn to label these redistribution or reaccumulation, meaning the argument being that if you're now a true Wyckoff specialist, you will see that as a distribution pattern, and then this would be a redistribution and a redistribution down lower. But now if you go and study Wyckoff, it basically boils down to the principle that you should not try and predict. So in essence, by calling it a distribution pattern, you're saying to yourself, I know that this is going to happen. You're that guy again, going to the owner of the floor, saying it won't drop. You don't want to do that. It's a range until it breaks out. Then it was distribution. It's a range until it fails. Then it was accumulation. That's how you should think of it, the same way that you do with your RSI. So Ethereum, 4-hour time frame, what do we have? We've got the buddy saying to us, we've just turned bearish. We failed to make a higher high again, same as Bitcoin, and we did it with hidden bearish divergence in mind, showing the market being very weak at this stage. Fall below this, we will then definitely lock in a lower low. And hopefully at this stage then, we could create a strong bullish divergence. Statistically, that is the area where that will occur based on the current range. Meaning Ethereum goes from 1.9 all the way down to 1.5, thereabout. And then we will have our strong bullish divergence. And then hopefully, wherever it will be, considering that that's the pivot, wherever it will be. And then hopefully there will be a support area that we can reclaim, just like we did in the exercise, an area that we can reclaim when this instance lose from a bearish point of view for the continuation of the trend. Okay, that's it. That's how simple this could be if you simplify the rules and just dumb it down. Don't try and be too smart and think of too many things, because it will inevitably confuse you because there's no guarantees. So Ethereum, the consensus for me is more downside. I don't see any reason for this to be bullish unless extra momentum enters. Now, how would that look if extra momentum enters? Say somebody picks up the phone and says, buy another 10 million Ethereum, and it does this. Whoops, the market changes its mind, changes its sentiment, and more people will then be comfortable buying, adding fuel to this. And that's all that the RSI basically does in a nutshell. Is it's just measuring the size of the gains between the bulls and the bears for that price action. That's all that it's doing. It's not really showing you it's turning. So all that it's saying is, at this stage, the bears has made so much leeway in price that it cannot be supported. There won't be any more orders probably. And a correction of bounce is imminent. That's all that was trying to show you. But what happened? We never reclaimed that bounce, that strong bullish divergence. We never even got close to that pivot, saying to you that even after that, the bounce was so weak that it's more, certainly at this stage, more of a bearish trend. In this instance, more of a bullish trend. The bounce was so weak off the divergence, we couldn't reclaim that level. So we expect a lower low or a higher high in this instance. So with Ethereum, I'm expecting a lower low. We need to go and sweep that out. That's it. Solana. I don't have anything to drink. My mouth's getting dry. We're 27 minutes in. Solana, same thing, but here it's different though. Bitcoin is down 50% from all-time high to where it's at. 125, 75, 60 something. And it's roughly down half of it. Where Solana went to 250. And it's sitting at 70. But it went to 70, $69. It sold off extremely hard. So the chart is saying to me, although we don't have a bottom in the same way as we would want, strong bullish divergence, what we do have though is we've overextended so far. We blow off like a blow off top. This would be like, I don't know what's the version of it, a dump. That the bounce was so strong that we could delete hidden bearish divergence. This thing would point me to saying Solana would be one of the first coins to not go and make lower lows anymore, or would potentially now become an accumulation coin, kangaroo coin going sideways. And if momentum would enter the market right now and say, delete the hidden bearish divergence on the 4-hour for Bitcoin and Ethereum, Solana would be a better bet to see more gains, maybe going to imbalance areas at 110, as opposed to BTC and ETH that doesn't have a lot of room to the upside. That means that my attention would rather be on Solana if the market turns bullish, as opposed to on Bitcoin and in Ethereum, because it's showing you it's stronger at this stage. The bears are too exposed. Their stops will do the hard work for you by driving price back up. So I am not bullish on Solana. I'm just less bearish on Solana, given the charts. And if a relief rally would happen, I would favor Solana as opposed to Bitcoin or Ethereum. Let's do BNB real quick. Same play. BNB very strong against Bitcoin. BNB retraced in the previous bear market only 60 or 70% similar, and or even less than what BTC did. BNB went and pushed a new all-time high, like Bitcoin did. Solana and Ethereum, those couldn't really do much. This means this is a really strong project. But now if you think about that, how much has it retraced from its all-time high? BNB went to 1,000 something. There you go. It's down 60%. It's got punished because of the success. If I want to say that because of that, it's over, here is what the chart is telling me. Lower highs, hidden bearish divergence. Unless we get above this, we cannot say that this thing is bullish. So this would be resistance. And we do have our hidden bearish divergence. We don't have, we could say we have strong bullish divergence if we ignore the wick and look at this on a closing price because it's there. And we do have, or do have our support area that needs to hold. This means BNB at this stage is a little bit of a mixed bunch. It sold off heavily. It created strong bullish divergence. It's above that level, and now it needs to hold, because if it gets below that line again, somebody picks up the phone and sells 10 million BNB right now, oops, gets it down, more momentum will probably enter. But if somebody goes and buys 10 million now, this one could go and delete that first. So from a bull point of view, it's even better than Solana. It's sold off heavily. And from a bear point of view, it's questionable because it's showing you that there's fight back from the bulls, but the bears are still in control. So if you want to short, the risk on this one is becoming increasingly higher against you, but the long side is still not really there, or from a different point of view, very cheap, because you don't need to hold this for long to find out whether this is the bottom. Now, Wyckoff does the following. It says, in any distribution, this is now divergence, and now you're talking Wyckoff, but let's just draw it out. I know those pictures by heart by now. Okay, there's your phase C, there's your phase E, there's the upper end of the range, there's the lower end of the range, and you can go and copy that and post it on the images because it will look exactly the same. So I'm just going to make this white so you can see what it is, what I mean by, there it is. I'll make that white as well. Oops. Now what Wyckoff says on divergences, if we have a shakeout, the rule is price will fall below what is called the ice, that's the bottom end of the range, and then it will get rebought back immediately or quickly above that level. Now, funny enough, if you go and have a look at this accumulation patterns of Wyckoff, and you put an RSI below that, you'll find that between these levels, price makes a lower low, and the RSI makes a higher low, giving you strong bullish divergence. And again, like I said, it gets bought back up the first pivot. That support level gets reclaimed quickly. Then what it does is it will have hidden bearish divergence, and it will delete that. And in that, it will give you a trend within range. And your first buying opportunity is normally the risky one, meaning you're buying here, where we're at right now. So you're buying the strong bullish divergence. Your second buying opportunity is when you reclaim the support there, and you're buying the support test. You will still have bearish notions there. There will be risk to this. And your third buying opportunity, when things turn really bullish, or more, the risk against being bullish becomes the least, is when you're there and you have a trend established and sign of strength. So guys, in conclusion, where we're at right now, divergences fits beautifully within Elliott wave, fits beautifully within Wyckoff theory, and they have a place to give you an understanding of how momentum works in relationship with price action. We also know that momentum has got zero guarantee or zero bearing on what the future will hold, because somebody could pick up the phone and change it. if they've got enough money to back that. And when we're at these stress points, it's the easiest time to change it because there's very little people or very few people participating in the market, which means the order books are thin. Here you've got high volume. Nobody can buy the bottom and hold it. Here you've got low volume. You'll see that. And the high volume kicks in when the trend is there. Now, will we get volume? Will these bottoms be supported and bought up? I don't know. All I can say is I've given you the information to make good decisions. No financial advice. You can go and apply this to any other coin you want to see. And you can take this to the rest of your portfolio and see where you are. That's it. Hope that this video was informative. I've given you a lot to think about, given you a lot to look at. Guys, a kind reminder, the content is brought to you and sponsored by ByBit. If you want to support the content, more of these videos, what you need to do, if you don't have a ByBit account or you don't have one affiliated with my link, get it today. Do that today. Links in the video description. And what I will do for those that have access to this, I will give you 1 week free trial to the Buddy Pro Analyst. This tool retails for a hell of a lot of money. You get 1 week free access to it, to play with that, to see how it works. Because as soon as you start applying that to your bigger moves, you're going to switch the Buddy Pro on. You'll see that it will override the candles. It's done that already. I just need to do the following. Maybe make the background black just to make sure that it pops. Let's just quickly do that. We'll override the candles. It will tell you when to remain bullish, even on dips, like you've seen. It keeps coloring the candle body blue, irrespective of what's happening on the trend. Tells you when to remain bullish, tells you when to remain bullish, tells you when to remain bullish, and when to seriously take divergences, bearish divergence in this instance, serious. This is a powerful tool that will change the way you look. So where you're at right now, what is it saying? You can clearly see that there's momentum for more, which supports the higher time frame, supports this relief rally, not there yet notion. Until that changes, the indicator will keep on doing this, what it's done best. Okay, I built it so that it basically reminds me exactly of what I need to think and feel, because trading, because this is an emotional thing more than anything else, it's easy to forget these simple things, simple truths, to simplify things like it is. So that is a way to say, support the content, and I'll give you something that you can have that as well. There you have it. Thanks so much, Dennis, for watching. Very little people at the bottom, as always. LTech codes is Bitcoin Cash. Looks interesting. The problem that I have with Bitcoin Cash, my friend, is from a fundamental point of view. I did the research on the Bitcoin Cash ecosystem. It's just nothing happening there. I don't know. I was really bullish on Bitcoin Cash, to be honest with you. But then I did that. It's like, if there's nobody buying that, where's the high pump going to be? And that's what destroyed some of the biggest alts, in a sense. Cardano, there was nobody there. Didn't do much. Okay. Solana has somebody. So let's see. There's people there. That lines up with an Elliott wave B bounce. I assume you're looking at the analysis. Look, I'm simplifying Elliott wave to a point. Like I said, I just look for the 80%, 20% of the rules come. A professional might say, yeah, but this might be a different complex wave, and the 4 is not only there. This is all part of the 4, because you can have a 5 that goes above that. And there's many counts, just like you'll have with divergences. But it's high still, and so forth. So I just apply simple rules and say, I don't try and predict. If we fall below the support, that would have been the wave. That's my idea. So in simplifying terms, it helps me navigate the market simply. Okay, so what do I want to see in order for me to be bullish again, big picture? This needs to look better. It's not looking good. Just because it's overbought, it doesn't mean that. There you were overbought, sold, overbought. It's not a bottom signal or a top signal. It's just showing you that there's clearly momentum in that direction. That's all that it's showing. And if this was strength, we would keep on doing this, showing to you that there's people buying the dip. We're not there yet. Have a lovely day, guys. See you tomorrow. Cheers.